The Precious Metals Week in Review, August 21st, 2015. Brought to you by Precious Metals International. Volatility continued this week as global macroeconomic data continued to disappoint. China's extremely volatile stocks appear to be the main cause for the accompanying rout in the U.S. stocks this week, which approached correction territory on Friday. As the Dow Jones Industrial Average and the S&P 500 both plunged on Friday, the CBOE Volatility Index, commonly known as the VIX, pushed its way to a new high for 2015. The VIX tracks the prices of S&P 500 options and is commonly referred to as the market's fear gauge and is used as a measure of expected volatility in stocks over the next 30 days. The number of Americans filing new applications for state unemployment benefits edged higher again for the fourth week in a row, climbing by 4,000 claims to a seasonally adjusted level of 277,000. The previous week's data was revised to show 1,000 fewer applications than previously reported. There has not been a consecutive 4-week rise in initial unemployment claims in the U.S. since August of 2010. In China, stocks once again sold off this week, prompting comparisons to the Wall Street crash of 1929 by one analyst. Thomas DeMark, the founder and CEO of DeMark Analytics, told CNBC on Friday that current moves in the Shanghai Composite Index are starting to mirror the crashes of 1987 and 2001, but could fall even lower. Mr. DeMark said, in 1929, the market declined 50.6%, so that was a warning that there was something more serious in the market breakdown. Mr. DeMark continued, saying that his current models point to a rally in Chinese stocks, but he also said that a further fall was still possible, which would echo world stock markets in the time of the Great Depression. The currency war discussions that were triggered by China's surprise evaluation of the yuan last week continued this week as both Vietnam and Kazakhstan moved to devalue their own currencies, sparking comparisons to the Asian currency crisis of the 1990s and concerns over a race to the bottom as banks competitively devalue their currencies. Japanese Finance Minister Taro Aso, at a news conference following a cabinet meeting this week, warned China against continued currency manipulation and said that Japan would face a tough decision on how to respond if China intervenes frequently in the market. In Tianjin, China's busy industrial port that witnessed a massive explosion at a dangerous goods last week, environmental concerns continue to arise. Local authorities have acknowledged that nearly 700 tons of sodium cyanide were stored in the warehouse that was the focal point of the blast, and wastewater runoff from the area shows massively elevated levels of the toxic chemical. Massive amounts of fish have begun washing ashore on the banks of a nearby river, leading the already exasperated public to doubt official assurances by state-owned China's Central Television that stated there was no significant presence of cyanide in that part of the river. In Greece, Prime Minister Alexis Tsipras rattled markets once again by announcing his resignation on Thursday in an apparent bid to consolidate his power ahead of additional bailout negotiations and triggering yet another snap election in the embattled country. Mr. Tsipras appears to have been forced into the move in the face of growing rebellion within the Syriza party. As the intra-party split widens, Mr. Tsipras apparently feels that he needs a new mandate from the voters in order to maintain his ability to continue to lead. Elections are expected to take place on September 20th, and until then, progress on any new bailout negotiations will be obviously questionable. Brent crude oil dropped back below $40 a barrel this week as economic data continued to point to a global slowdown that could weaken demand for crude oil in an already oversupplied market. Oil has not been below $40 a barrel since 2009, and it would appear that there is more pain ahead for the battered market as oil-producing countries continue at current production levels. The euro drifted slightly downwards against the US dollar for much of the week before beginning a climb higher on Wednesday. The upward trend continued through Friday, and the euro appears set to close the week higher against the US dollar as a result. The Japanese yen nearly mirrored the euro's moves this week, drifting essentially sideways against the US dollar until Wednesday, when it began its move higher. The yen too continued its upward trend into Friday and also appears set to close the week higher against the US dollar. Volatility should be expected to continue. The Dow Jones Industrial Average, DJIA, was headed for its worst weekly performance in 4 years on Friday, following in the footsteps of other stock sell-offs that took place across the globe this week. Weaker oil, steel, and copper prices all combined with weaker economic data out of China to put a sense of unease into stock traders over the true state of the global economy. As evidence of further global slowdown continues to mount, many analysts are now worried that the U.S. Federal Reserve might be forced into delaying their so-called liftoff in September, when they are widely expected to begin raising interest rates. In Europe, Greece has once again begun to play political games with its bailout funding. In the face of a widening split among members of his Syriza party, which threatened his majority rule, Alexis Tsipras resigned as Prime Minister of Greece in the hopes that a forced snap election in September would see him re-elected with a mandate from the Greek voters to continue negotiations with international lenders for further bailout funding. Syriza came to power widely under the promise that it would act to reverse crippling austerity measures, which were put in place as a condition of previous bailouts. After months of wrangling and tense negotiations which saw the Greek economy slide further backwards, Syriza was forced to take a seat back at the bailout table and eventually conceded to even more cuts and austerity as a condition of another round of bailout funding. Mr. Tsipras' move is risky considering that if he does not win re-election and a new mandate from the Greek people, then the bailout funding he fought so hard to acquire will be thrown into jeopardy once again, along with Greece's continued membership in the Eurozone as a whole. While stocks around the globe sold off this week, precious metals seem to hold relatively steady amid the carnage. Mainstream media outlets were forced to reverse their all-out assault on ownership of precious metals that they have been carrying out for years as stocks continued their rout through the week. If the global stock rout continues, the window for purchasing precious metals at current price levels could close dramatically as investors seek safer harbors for their hard-earned cash. This weekend, it will be critical to watch what happens in Asia when markets open on what will still be Sunday evening in New York. In the coming weeks, global geopolitical and macroeconomic data will be critical in assessing where stock markets and precious metals prices are heading. If investors flee stocks and suddenly surge into precious metals as a safe haven play, demand for physical precious metals could outstrip the supply capabilities under the scaled-back operations. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, August 21st, 2015. Brought to you by Precious Metals International.